We'll be going over IRS Notice LT11A. This is a notice that you might receive from the Internal Revenue Service if you're in the collections process and the IRS is about to seize your property, also known as a levy. So, generally speaking, the IRS collections process starts, with your tax return, determining whether or not you still owe taxes when you file. Generally speaking, most people pay by the filing deadline, but those who don't, their tax bill is outstanding, and then it can go into what's known as the collections process. So basically, the IRS is required by federal law to collect back taxes. Generally, they'll send written warnings about virtually every step of the process. So you'll get a couple of written notices, then you'll have a lien placed on, or a notice of federal tax lien that can be placed on property. Could be bank accounts, it could be real estate, a wide variety of things. And then a lien doesn't mean that the IRS will take your property. It simply means that if you, for example, sold an investment property that has a lien on it, the IRS would get paid out of the proceeds of that, and then you would get the rest of the money afterwards. But the next step beyond that is when they actually start seizing assets because the lien hasn't worked. So generally speaking, the lien makes your credit look bad. It limits what you can do with that property. But if you went through the route of going through the lien and that doesn't work, then the next step is a levy. And this is the notice that you would may receive if that were the case. So we'll break this down. Notice is 5 pages. We'll break this down step by step, kind of walk you through what you need to do and some other things about how levies work. The first thing that I want to do is kind of point your attention to the upper right hand corner. You'll see the notice type, that's LT11A. The notice date, which is March 2nd, 2019. There's a taxpayer ID number, looks like someone's social security number, and then a contact phone number. So the notice date is particularly important, especially if you're in the collections process, because everything has a timeline. So the IRS can't just send you a letter and then start taking things right away. There's a certain period of time that taxpayers are allotted under the collections process. And the notice date is very important because the timeline starts with the notice date, not necessarily when you receive the notice. So that brings me to point number 2, which is over here in the left-hand side, the taxpayer name and address fields. It's a good practice to keep your address up to date with the IRS. So normally this happens if you file a tax return with your new address. The IRS will update your record accordingly with the new address. However, if you're in between tax returns and if you're receiving correspondence related to the collections process, then it's probably important to keep your address up to date even between tax return filing seasons. So you can do that in one of 2 ways. You can call the IRS, go through the phone tree. You probably call this number right here, go through the phone tree, validate your information, and then change your address over the phone. Or you can file the official change of address form known as IRS Form 8822. For business owners, it's IRS Form 8822-B. So we'll put links in the show notes to resources we've created on both of those forms, but it is important, especially in this case, to keep your address up to date with the IRS because you can expect to receive more correspondence from them. And again, the longer your correspondence is in the mail trying to figure its way to your new address, the less time you have to take the action you need to pay this debt down. So notice of intent to levy, notice of your right to a hearing, intent to seize your property or rights to property. So generally speaking, the IRS just wants their taxes paid. So here's the original amount owed. Here are some penalty charges, some interest charges. And so the IRS kind of lists what they can seize. Are they going to go and take your house out from under you? Probably not for $4,800. Not if you have a job where they can simply garnish wages. Not if you have banking accounts where they can simply file a order with the bank to seize assets from your bank account. Like the IRS really is trying to get the most liquid way of paying your debt as soon as possible. So if you have financial assets, that's where they're going to go. They're not going to say, hey, this person owes $4,800, but he's got 50 grand in his bank account. Let's go ahead and take some more. They're going to take what is owed to them in a way that they can justify. So, but here are the list of all the different things that the IRS could possibly seize, in terms of property rights to pay down your tax balance. Here is a payment voucher. If you simply wanted to, make the payment and get this done and over with, you can either go to the IRS website or you can cut this voucher off, send it to this address here. I always take a look at the addresses on the letterhead versus here. In this case, they're the same. The voucher address is the same as the letterhead address, but that's not always the case. So if you are going to use a payment voucher, I consider it a best practice to use the address on the payment voucher, not the letterhead address. But if you send a check or a money order, you would make it payable to the United States Treasury. Should write your social security number on it in any correspondence. In this case, there isn't a tax year tied to this debt. Usually there is, and you would write the tax year and the form number on here, but this just says you owe $4,800. So the notice date was March 2nd. That's kind of important to know because it says right here that if you don't pay the balance by April 1st, which is 30 days from that time, then the IRS may seize, or known as a levy, seize your property after April 1st. So if you can't pay that amount due, you can go to the IRS website and submit a request for an installment agreement. This balance seems low enough to where you could do that online, and it's pretty automated. For higher account balances, you may need to file IRS Form 9465. That's the installment agreement request. There's usually a setup charge, but you can reduce that charge if you sign up for an automatic debit deduction from your bank account. And also if you qualify as a low income taxpayer, that fee would get completely waived after you've paid down the debt in full. So, and there's a form that you would complete to request consideration as a low income taxpayer. So we'll put links in the show notes to resources on that form as well. If you want a collection due process here, or collection due process or equivalent hearing, you can complete IRS Form 12151. Basically, that's an administrative hearing so that the IRS can kind of hear your side of the story. So you would want to respond with that Form 12153 by April 1st. I'll put links in the show notes to resources on that. So either in the hearing like if you submit this request, or if you submit an installment agreement request, the IRS will suspend the collections process. So if you do one of those two things, if you request the installment agreement, or if you do the collection due process hearing, the IRS, as long as it's done by April 1st, in this case, the IRS will suspend the collections process either until they've accepted the installment agreement, in which case it's no longer in the collections process, you're actively paying off your debt, or you go to the hearing, and then based on the outcome, they will either resume within a certain period of time or they'll go in a different direction. There's a contact information voucher here. You can include this with your correspondence if you need to, but it does say if your address is changed, call the 800 number. So about federal tax liens, the IRS can file a notice of tax lien even if you request a hearing. And if your debt is high enough, which in this case it is not, it's less than $52,000. But for high amounts of tax debt, there's a part of the U.S. code that actually requires the IRS to notify the State Department that you may be owing a seriously delinquent tax debt. And a seriously delinquent tax debt is defined as more than $52,000. So that includes penalties and interest. So if you had $50,000 and then the IRS tax on penalties and interest, you fall into that category. And what the State Department would do is they generally will not allow you to leave the country through like a passport control checkpoint. They won't issue or renew a passport. They could revoke your passport. So that's kind of a stipulation to make sure that tax cheats don't just flee the country without paying their taxes. So here's what would happen. Basically, they're going to start seizing property to be able to satisfy that tax debt. Here is a summary of the tax debt by year. So it looks like this is an employment tax return that has been delinquent, which is weird because this is a taxpayer ID that looks like a social security number. So again, this is just kind of like a walkthrough example. There's a section here on how the IRS calculates failure to pay penalties. That appears to be the penalty here. And then the interest that's calculated based on the outstanding amounts. So you can request a removal or reduction of penalties under a couple of circumstances. One would be a reasonable cause. So if you can demonstrate reasonable cause like a serious illness or an injury, death of a family member, if you lost your financial records because of a natural disaster, all of those would qualify as reasonable cause. Also, there's a program known as first-time abatement. So the IRS has wide discretion over being able to reduce or eliminate penalties for someone that's considered a first time. And there's a strict definition of first-time abatement. And technically within that definition, you can have done this before. Let's say that it hasn't been recently, but it comes up again. You could possibly qualify under first-time abate. And then the third way that you would qualify is if you actually wrote the IRS to get written advice on an issue and you gave them complete information that was accurate. If you received a written letter from the IRS that told you what to do and you used that information on your tax return, if the IRS turned around and penalized you for that advice, then you can also request an abatement of your penalty for that. So erroneous written advice from the IRS. So for all three of those, you would complete IRS Form 843. That's the claim for a refund and a request for abatement. Interest is a little bit trickier. You can't directly request an abatement from interest. However, if you are able to reduce your tax liability through the collection due process hearing, or if you're able to reduce your penalties, then the IRS would go back and recalculate your interest here accordingly. So there's not a whole lot of money that's attributed to the interest. What is it? Maybe a couple hundred? Sorry, $114. So, that's a minor part of this, but every dollar counts, right? So you could find that their interest is recalculated when you have the penalties removed or the tax bill is lowered. So there's kind of links to a couple more resources and the publications on how the collections process works. I'm going to take a quick peek at this website right here just to see if there's anything we missed. So options on how to pay your balance. If you owe less than $50,000, you can use the online payment agreement tool that I mentioned prior. Let's see. Collection due process. There's a link to the FAQ on that. And then there's some frequently asked questions. Nothing really that we didn't already go over. So I'm going to go back to this notice and just kind of wrap things up. So I guess the point of this is if you receive any notice, not just LT11A, but any notice that says notice of intent to levy, then you need to take immediate action if you don't want to wake up to a nasty surprise with your bank accounts or other assets. So we'll put links in the show notes to the resources we've created about the tax forms mission here. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, or if there's another topic that you'd like to see in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.